Hi traders, and welcome to the Friday Market Watch on the 20th of March. So another volatile week has been the main focus on the markets. We can see quite a bit of volatility still in the major currencies and of course the indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Alright, so we'll start out here with the Aussie USD. And yeah, quite clearly we can see we've been going a little bit sideways in between this very tight, well, what's becoming a very tight range between 70 and around that sort of 71-ish area. You can see the highs here around that sort of 71 to 71.20. Most of the trading has been contained in that zone this week, but it's been like that for quite some time, as you can see. Basically, once we broke through here at the end of January, we've been in this pretty tight zone. A lot of this has got to do, with the dollar index obviously being a little bit, it's been strong actually, given the enormity of what's been happening. But this week, especially in the last session, we have seen quite a significant fall. So no real surprise to see a bit of a rise up above the 20 moving average again. But this is one of those ones where once you know that a range is being set, and we've known that for quite some time, obviously, because here we can see that the price has been bouncing between the two levels, you can start to instinctively trade into the direction of the support and the resistance bands, and you've got to do that on a smaller time frame. So if you start going to the smaller time frames, so if you're going to be scalping, you say you go to a 15-minute, if you zoom it right out, I don't want to zoom it too far because then you won't even see the patterns, but it should give you a bit of an idea of what I'm talking about in terms of the higher high, higher low, and lower high, lower low sequences in between the two bands. I haven't got a top band drawn because we know we've obviously seen the peaks around here. But you can see that it's very, very clear once that you do reach the bands that if it does reverse back into and start heading towards the top of the band, you're going to get the higher high, higher low sequences that we talk about all the time. Same with on the downside, the lower high, lower lows all the way through. Patterns that we talk about each and every day effectively play out all the time in trends. You can see here we've got a head and shoulders, the shoulder and the head and the shoulder, big fall, retest of the neckline, absolute classic head and shoulders there on a 15-minute chart, boom, straight down, pull back to a 20 moving average, straight down again. It's really, really straightforward when you break it down into simple technical analysis. And when we're in a very volatile market, you really want to be trading the smaller time frames anyway. So you want to be focusing on the smaller time frames and scalping to really isolate the best opportunities in the trade. You can see we've been going sideways, so we need to play inside those two boundaries. And the two boundaries I'm talking about are that 71.20 here. So I'll pop a line there just so you know what I'm talking about. And of course the 70 cent mark. So while those two boundaries are in play, I probably wouldn't be really adjusting anything there. I'd be looking at that as being the main stay for any trading opportunities. If it's trading higher high, higher low, aim for the top. And if it's trading lower high, lower low, aim for the bottom of that boundary until we get a daily close outside of it and we start to trend in a different direction. So pretty straightforward there on the Aussie USD. All right, so I'll move over now to the US dollar yen. Look, this has been quite a significant fall, obviously, from the peaks that we can see here. Very, very big red candle to the tune of nearly 4%. You've got to go to the smaller time frames to understand it, but again, in times of volatility, it's so much easier when you do start to play the scalping game inside of it. Now, look, we know here we started to see the lower high, lower low sequences on a 15-minute chart, so the weakness was starting to kick in here. I'm not suggesting that this was where the opportunity was, but this is where the warning was. So once we saw a lower high, lower low, and we started to break down a little bit in terms of movement on the upside momentum, you're starting to look for those signs. This is the first sign that we got, lower high, lower low. That's not the one you would have entered. This could have been a very aggressive entry, but I'm not so sure I would have taken that. The real entry, of course, here is the pullback to the 20 moving average. Once this one happened here, then we were off. But again, it's really, really important to aim for those boundaries on the support and resistance because that's what's going to get you out when you are looking for a profit. Okay, so as you can see here, around that sort of 157.80 area was the target on the bigger time frame, and it got there quite quickly. So there's the setup and the momentum are very, very important to combine when you are looking at placing a trade, especially in volatile markets. So, although that looks impossible to trade, you think, oh, wow, if you didn't get that from the start, it was impossible to get. When you break it down to the smaller time frames, it was actually quite obvious. And then what was even more obvious was the potential target that it was going to go to, because this was a very, very strong level. The 157.80 area was a very, very strong level. We've had very heavy resistance through there, and we also had support. So no real surprises there. Throw in the 20 moving average, which we know is generally a target when a market is moving quite aggressively, and it has deviated away from it, and all of a sudden you got your take profit. So hopefully you're able to take advantage of some of that, because that was a really, really good trade, I feel. All right, US dollar. And look, it's been a very, very strong week up until this last session. You can see that we had a couple of days weakness, but then it came back with a fair bit of resurgence. There's a lot of mixed news coming out in terms of what is affecting the dollar and what is affecting oil. Of course, all of it is kind of interlinked, but to try and break that down in a session, especially in a trading session, is going to be almost impossible. So you're better off just looking at the technicals like we always do. We saw quite a bit of weakness in this last session. As you can see, a big drop from the previous peak that didn't quite make the same high and didn't quite reach the 100.60 level. It did reach the 100.50 level, which is what we were after last week. So hopefully a lot of people got this trade from here to here, because that was a really solid foundation trade. The euro, of course, is what you're looking at in terms of the actual trade itself, because that's the easiest one to trade from a spread and cost standpoint. And you can see quite clearly that it hit the boundaries early in the week at around that 114. It seemed very unlikely, I guess you could say, when we were talking this about a few weeks ago, when we said the 114 is a likely target, but here we are. Hit it late last week, early this week. Bounced off it quite nicely, but now has hit the 20 moving average, and we know that there is resistance at that 116 as well, because not only is the 20 moving average there, but we've got quite a lot of price action. All of these highs here, you can see right through there, all of this support right through this area here, and of course this big heavy area of support right there is in this 115.80 to 116 zone. So I would expect that there's going to be trouble around this area. If we see a push over and a close on a daily above it, and I'm talking well above it, like probably a 116.50 or something as significant as that, because it needs to break that zone properly, then we would look at potentially taking it longer opportunities up to around 117.70 to 80. But it's got a fair bit of work to do before it does that. It's been a good candle, no question about that. But there is still quite a bit of work to do in terms of getting past there. If it rolls over here, of course, past the 20 moving average, and it starts to cycle down, and we start to see a series of lower highs and lower lows, we'd be back and aiming for that 114 as the main target. That would be, I would like to see that as the next opportunity. All right, let's move on to the S&P 500. This one has been obviously very, very, heavy on the sell-off recently. We saw a little bit of a resurgence today in terms of a pullback. We can see that it's trying very, very hard to get back above these real key levels here at around that sort of 6,600. I think that in terms of what we need from the market right now is probably some form of stability on probably the way up, to really give us some confidence that could get back to 67.50. We know 67.50 is an extraordinarily important zone for the S&P 500. Has been for a very long time in recent history, as you can see, basically since October of 25 when it first hit it. But now it's starting to really test the boundaries of how far it can hold up. It's broken through, pulled back and tested it. Perfect classic trade there. I mean, if you really highlighted that trade, a pullback to the 20 moving average and that roll reversal zone is, that's technical analysis 101. So that sell off there was pretty easy to predict. If you go to, you'll probably see it on a 1 hour, but yeah, just as importantly, you're going to see it on all of the time frames. You can see the slow sell off, pullbacks to the 20 moving average, all the things we talk about each and every day. But look, the 15-minute one, as you can see, breakdown of that level, pullback to the 20, off we go. Lower high, lower lows all the way down. So as much as it's volatile, you can still trade it. Today's session was obviously a bit mixed. Tried to get all the way back down to 65 or almost 60. Very, very heavy support there at this point in time. You can see we've got these two very big rejections that pushed the market onwards and upwards when it did test it twice. They both have been shock events, and if it reaches it this time, I guess it's not really any different. It is still a shock event, no question about that. But it's one of those things where if we are looking for a short opportunity, probably that 65 to 65.20 would be the last line of defense in terms of very strong support. After that, the roll reversals start to get very thin. So if we do see more weakness and we start to see a series of lower highs and lower lows, I'd be aiming on scalping opportunities down to probably 6,500, but a daily close below there and continued momentum. If that's where we end up next week, it's a long way away now, and we're starting to see very weak role reversal zones in this area. I mean, we can go out further, but as you know, this is all basically all-time highs, so right through this period. So really, if we get past here, and we know that there is, I don't want to draw too many lines because it confuses everybody, but look at me do one there anyway. I'll get rid of a couple of these just to clear it up. We'll worry about them if we need to. This is the area now that the last line of very strong role reversal is, until we effectively get all the way back down to 6,100, which seems like a very, very long way away. So not that it can't reach it, because the markets can do amazing things very quickly. So let's see how we go. If you're scalping, look for opportunities down to maybe 6,500 if we see lower high, lower lows. And if it starts to turn up and we start to see a series of higher highs and higher lows and a little bit more momentum shift to the upside, start looking for that 6,750 as the target up there. So I hope you've had a great week's trading. In terms of volatility, we've seen some good moves. Key levels have been holding up and been hitting, so hopefully you're able to take advantage of some of those. Have a fantastic weekend. I look forward to seeing you all next week.